Tesla and it stock at its lowest point in quite some time.
In this video, with Tesla stock down more than 50% in 2022 alone, the mainstream finance media asks and discusses the question, is Elon Musk distracted? And speaking of distracted, am I distracted? After all, I did post another 2 exclusive videos to Patreon this morning before posting this to YouTube. So you might say, yes, obviously I'm distracted. That time's coming from somewhere, right? That's why I've stopped posting videos to YouTube and my YouTube channel is currently collapsing. Yeah, don't think about that too much. And again, massive thank you to everybody currently supporting the channel on Patreon. The Patreon community is growing at a ridiculous rate. The Patreon page is now officially number 120 globally out of more than 250,000 accounts. Absolutely insane. And yep, as I told you guys yesterday, the clock's ticking. You're only going to hear me banging the drum on this for a few more days before bang, hammer drops, and then it'll all make sense. So if you're thinking about joining Patreon, now is most definitely the time. Use the card in the corner or the link in the pinned comment.
One that is on the show, I feel like every day here at Caroline, is Tesla, and it is going to be the subject of this segment, and for good reason. Stock at its lowest point in quite some time, a stock that was as resilient as we've seen a mega cap be for most of 2022. But really has joined the party over the last couple months, going from well over $300 a share now post-split to now below $200, losing a good 35% of its value in short order here. What's the latest here for the electric vehicle maker?
I'll take that one. Near flawless execution, incredible growth, insane wait times, industry-leading profit margins, and I don't just mean by a little bit, but multiples 2 to 3 times higher than the industry average, insane future growth prospects, rapid expansion production, new products, in fact, one of the most compelling, if not the most exciting and compelling product roadmaps of any company on the planet, and a truly absurd disconnect between the reality of Tesla's execution, their growth, and their future prospects, and the stock price. It's times like these that intelligent investors go shopping, pick up bargains, and do very well over the long term, in my opinion. The hilarity is, the lower a stock like Tesla goes, the more the bears come out of the woodwork, and the more convinced they are that the stock's overvalued, the lower it goes. See, look, it's lower. See, it's proof, it's going down, it's overvalued. I'm sure most of the Tesla short sellers would still be calling this company overvalued at $10 per share and even $1 per share, rather than picking up the bargain of the fucking century. And the hilarity here is in a few months or years' time, when Tesla stocks continue to go higher and higher overall, in my opinion, these bears will be nowhere to be seen. Tesla stock is literally half price, as I record this, from where it was about a year ago. Half price. The irony, of course, is that the lower it goes, the better a bargain. Yet, if you hate yourself and live in your mum's basement and think Elon's a fraud and Tesla's a scam and the competition is coming and the stock's overvalued, the lower it goes, the even worse value it appears to be. It almost defies belief. Let me know in the comments below if anyone's been picking up Tesla stock at half price, or is it just me? The internet tends to have a very short memory, and this is why I always encourage everyone watching this channel to keep me accountable. And speaking of being accountable, I am extremely confident that in 5, 6, 7, 8, 9, and 10 years' time, Tesla stock is going to be many multiples higher than it currently is today. Long-term investors aren't going to give a flying fuck if they're buying Tesla stock for $400, $300, $200, or $69 per share today, if they're holding for the long term. In case you don't know, stonks don't always go up. And of course, I never give investment advice. I really encourage everybody to use their own brain, do their own thinking, draw their own conclusions, and act accordingly. But I do want to make sure that everyone is absolutely clear. I really genuinely believe Tesla stock today is far and away the best risk-adjusted opportunity in the stock market. That I'm aware of.
Yeah, you know, it's interesting. It's down about 4% right now, a little bit more than that. Already down more than 12% this month alone. And there's not one key headline that's driving it lower today, but I think that there can really be a bunch of reasons. First up, we know those COVID lockdowns in China aren't getting any looser, and based on what Chinese officials said this weekend, that basically they aren't easing up, I think that could definitely be weighing on Tesla stock. I mean, we've certainly seen it weigh on Apple today too, which we'll talk about in just a bit. Obviously, higher interest rates have meant a move away from growth stocks, although Tesla, as you said, had been resilient, but over the past few months we've seen interest in it kind of wane, and you know, we've been seeing this widening gap between the NASDAQ performance against even the small caps, but also just the tried and true, the Dow, the value stocks, the more defensive plays, the ones that are income opportunities. So that could be part of it. There's obviously a lot more talk of recession risk as we see the Fed continue to hike interest rates. We know that they're not anywhere near done quite yet, said it's too soon to think for a pause. So that could certainly weigh on the economy and in turn weigh on spending power. I know Tesla's always been a supply problem versus a demand. I think there is some concern that it could eventually become a demand problem.
On what planet is there a concern that this could become a demand problem in the future? The only issue in terms of demand in the automotive industry is for ICE vehicles. Demand for ICE vehicles will collapse. It's already happening. Automotive manufacturers are naive to this fact. Even companies producing at best shitty EVs, poorly priced, with poor performance, poor features and functionality, will sell every single vehicle they make for years to come. I genuinely don't believe that most people watching truly grasp the insanity of what has happened to Tesla stock over the last 12 months. As we've heard, in the short term, the stock market is a voting machine. Sentiment, macroeconomic environment, fear, uncertainty, doubt. Oh, we're selling growth stocks, buying value stocks, okay, better sell Tesla. But over the long term, the stock market is a weighing machine. What is the intrinsic value, the real substance? How is this company executing? Do they have competitive advantages, industry-leading profit margins, and so on? It really stuns me. And I mean stuns me that people today aren't saying, hang on a minute, does this really make sense? I mean, Tesla's already making more profit than Toyota every quarter, selling a fraction as many vehicles per year. No one's catching them. It's inevitable. They've won autonomy, they've won EVs, they've won manufacturing. Their operating leverage is absolutely insane and just getting started. We have a money printer here, a company that inevitably in the future will be bringing in $500 billion up to $1 trillion plus of profits every single year. And yes, I do mean over the long term. Shout out to my Tesla valuation model, available exclusively on Patreon. You can see all the assumptions there. Tesla is stacking S-curve upon S-curve upon S-curve. We've got EVs, AI, automation, robotics, and then of course the Tesla bot, and it's currently half price. It amazes me. Many investors who previously weren't interested in Tesla stock haven't started going, hang on a minute, I didn't really like it at 400, but I mean at 200? I do really want to emphasize this point because a lot of people just don't seem to get it. It's a very rare moment in time indeed when a company's stock price relatively accurately portrays their execution. This is how investors make outsized returns. If this stock market widely appreciated Tesla's execution potential, the competitive advantages, and so on, in 2019, Tesla stock would never have been available as cheap as it was. Let me just check what I was paying for Tesla stock at its lowest price point 3 years ago. So in May 2019, cheapest price I paid for Tesla stock was $12.37. Another situation in which Tesla stock was approximately down 50% over a relatively short period of time despite near flawless execution. At the time, this made absolutely no sense, hence buying with every spare cent. Next minute, more than a 20x within a couple of years, comes back a little bit, still up about 15 times from that point. It didn't make sense at the time, it was literally the bargain of the fucking millennia. And yet here we find ourselves once again in a similar situation. In my opinion, it's very important for investors to be able to detach the stock price from the company's execution, but that involves a brain being used, which is obviously too hard and painful for most people. This is why it is so important to do your own thinking, not to just follow along and do what everyone else is doing. Because if you do what everyone else is doing, you would currently be selling the best risk-adjusted opportunity in the stock market, in my opinion.
Also, we have the midterm elections tomorrow. We know there are big implications for so many things from those, including when it comes to energy taxes, which could obviously have an impact. We're seeing shares like of Rivian down about 3% today as well. And then, of course, there's the Twitter effect. Elon Musk is now running Twitter as well as Tesla, SpaceX, the Boring Company, and so on. And I don't know if you've been on Twitter, Alex, lately, but I'm seeing more and more from Elon Musk, more than ever before. He's getting into arguments with people like Stephen King, with AOC, with, he's with Kathy Griffin. He's been very involved on Twitter, and it could be a kind of a PR nightmare possibly for him.
There's definitely a large grain of truth in this comment. PR nightmare. Again, Elon says what he thinks, says what he believes, gives zero fucks, irrespective of the consequences. I can definitely relate. And again, this goes back to the disconnect between the perception and the reality. Elon Musk's on Twitter. Elon Musk is sharing some controversial opinions. Elon Musk is spitting facts. People are getting butthurt. There's more hate stream directed towards Elon Musk. Therefore, Tesla stock goes down, which actually is happening. Elon's tweets don't change the profit margins on Tesla vehicles. You guys understand, right? The stock market doesn't understand, but hopefully you do. Over the last 12 months, particularly in the last 6 to 9 months, a series of unexpected events have pummeled Tesla stock down. None of them have anything to do with the company's execution whatsoever. You have the macroeconomic environment, interest rates going up, runaway inflation, fears of a recession, war in Ukraine, Elon's Twitter acquisition and the drama behind that, Elon's sale of some Tesla stock and the drama behind that, and loads of other factors as well, including half the entire planet trying to destroy his empire, his credibility and his reputation.
There were massive layoffs. He laid off several people at Twitter, and now there's reports that he's going to be asking some of them to come back because they were mistakes, or they realize that they actually do, in fact, need those employees. So I think that there could be a credibility issue.
Again, the perception versus reality here are so distorted. In many people's eyes, you got rid of people and now he's asking them to come back. What a fucking dumbass. Learn to run a company, you silly dumbass. Let me explain why this is actually the polar opposite of what people are perceiving it to be. Here's a highly relevant quote from Elon Musk. Try very hard to delete the part or process. If parts are not being added back into the design at least 10% of the time, not enough parts are being deleted. I would hope that I don't need to explain this to too many people watching this video. I am under the impression that the majority of people watching this channel are a little bit above average in terms of intelligence. But if you don't get it, allow me to explain. Elon Musk was describing engineering a product, a thing, making stuff. The best part is no part, the best process is no process. We've seen Tesla and SpaceX executing on these very words for a decade and a half each. This exact same principle also applies. That's right. You see where this is going? To the employees of Twitter. If you're not firing a shit ton of people, eliminating parts and processes, or in this case employees, and then rehiring a few, not enough people have been let go. This is to be expected, and it actually makes Elon more credible, because it shows he's moving as fast as he possibly can. And if he pushes things a little bit too far, he's willing to turn on a dime and go, okay, yep, a little bit too far, let's bring these people back. He's not ashamed, he's not embarrassed, he's just busy getting shit done. This makes him more credible. If a CEO, for example, were to lay off a ton of people and realize, okay, a few of these people, we should bring them back, they're actually great engineers, we need them, but then doesn't do it because they want to save face, that shows a lack of credibility. Of course, people are portraying this as Elon being incompetent. Oh, what a dumbass, 5 people to bring him back. You're so stupid, Elon. You don't even know how to run a business. But it's actually the polar opposite and a great insight into how effective this guy is at running companies and optimizing.
Or it could be hurting Elon Musk's credibility. I saw Al Root over at Barron's saying that Elon Musk needs to get in his lane and drive the speed limit.
That's right, Elon. Stay in your lane, mate. Don't do things. You don't understand social media. How dare you buy Twitter? By the way, stop moving so fast, you fucking idiot. Slow down. Go as slow as everybody else. Obey the speed limit, because that's what everyone else does. Because you want the same results as everyone else, don't you, Elon? Right? Oh, you don't? Maybe that changes things a little bit.
And I thought that was a pretty good summarization of what needs to happen. So a lot of factors that could be weighing on Tesla shares, which, as you said, are now trading below $200, a level that's been pretty key for this stock.
Yeah, a lot here to unpack, Caroline. When you talk about this company, it seemingly makes dozens of headlines on a daily basis. I'm going to talk about the Twitter stuff for a second here, because Twitter's a private company now. Doesn't matter to financial markets. You could argue that, hey, if he needs money for it, it's a distraction for Tesla. Look, and I respect the team at Barron's that writes that. I respect the opinions of everybody. I'm not necessarily an Elon Musk fan. I'm not necessarily not a fan of him. He's just another one of these business owners and someone who runs things. He's obviously made himself a very public figure. He has made himself very much in the limelight as of late with his conversations on Twitter. But look, I haven't achieved anything like Elon Musk has, so who am I to criticize and tell him how to run his businesses?
This guy. Nail on the head. All these folks in the peanut gallery, the keyboard warriors, the armchair Einsteins telling Elon what to do, how to do things, he's doing it wrong, and so on. While they are freely entitled to share their thoughts and opinions, it is worth putting them in context. If in the domains you are currently criticizing Elon Musk, you personally haven't accomplished anything whatsoever. You aren't currently employing well in excess of 100,000 people globally. You haven't created well in excess of $1 trillion in market cap. You haven't founded, give or take, half a dozen billion-plus-dollar companies. You haven't disrupted multiple industries. You don't have Elon's track record. Yet you have the audacity to tell Elon he's doing it wrong. It is worth taking a moment just to reflect. This doesn't mean that people may not have valid suggestions, ideas, or criticism, but it is worth putting things in context. It reminds me of a quote. Those who cannot do, criticize, or teach. That was a low blow, but I mean, it's kind of true. Shout out to the university professors who care so much about teaching people how to build multi-billion-dollar companies that they've never actually bothered to do it themselves. So noble.
If I have achieved something like that, maybe I would know. I just, quite frankly, he's proven a lot of investors wrong over the years. Why doubt him at this point? So
I absolutely love this. Somebody in the mainstream finance media saying reasonable, rational, and logical things about Elon Musk, and the peanut gallery currently criticizing him. I'll
let him do his own thing. Obviously, it impacts the people whose family members or a part of those Twitter teams that are layoffs, but we're hearing the same thing out of companies like Meta. Elon Musk has nothing to do with those layoffs. So not defending his actions, not supporting them, just simply saying, hey, it's the real world, things happen, and we'll see how they play out. From a trading standpoint, I think Twitter's nothing but noise and maybe something to grab clicks on the internet. It has nothing to do with Tesla. They're completely different things. And I think that if you're looking at Tesla and looking to trade it, you got to focus on Tesla.
God damn it. This may be the single most logical, reasonable, and rational thing I've ever heard anyone say in the mainstream finance media about any of Elon Musk's companies or the man himself. Credit where it's due. It's almost as if this guy's brain both works and is regularly employed.
But they're run by the same person, and I think that's the key point to think about. I mean, Elon Musk was working, 12 to 16-hour days even before he bought Twitter. I wouldn't bet against Elon Musk either. I think that he's done amazing things. But how much can one person fit into a day, I think, is one question. And also, based on what we're seeing play out with Twitter, it seems like a bit of a mess. And one would argue that if he has to focus on that, he's not focused on Tesla. So I'm not saying that's necessarily the case, but I can see the argument to be made that there could be some concern that maybe it's a distraction away from, for Tesla shareholders, they could see that he's maybe distracted away from their ultimate, what they think is most important, which would be Tesla.
Now, it is true. If Elon Musk is spending time on Twitter now that he wasn't previously spending on Twitter, that's coming from somewhere, right? Spoiler alert, he's just sleeping less, at least mostly. And this is weighing on Tesla stock, no question. One of the reasons Tesla stock continues to get pounded lower. And let me be clear, Elon will be spending considerable time on Twitter initially. He needs to get this thing moving, turned around, then he can start stepping back. So no question, Elon's obviously spending a lot more time on Twitter today than he was a few months ago, because he didn't own it, and he'll be spending considerably more time on Twitter in the next few weeks and months than he will be in the next few years. Goes without saying. But here's a crazy idea, I know, but just play along at home. If Elon Musk is focused a little bit more on Twitter for the next few weeks or months, does that mean the production lines at Tesla just stop? Does that mean they forget how to do their gigantic gigacasting? Does that mean the order backlog just vanishes overnight? Does that mean all the data they're currently collecting from their autonomous vehicles out on roads suddenly stops coming in? No, it doesn't. Do you guys understand, right? Think about it like this. SpaceX and Tesla now are both teenagers. Okay, literally, they're teenagers. The companies have been around, give or take, in 18 years. Twitter, however, until Elon's acquisition, was a fetus, unborn, no potential realized. And Twitter is now an infant. It needs an enormous amount of attention, otherwise it's dead. But it won't be too long before this infant transitions into a toddler, and then a child, and then a teen, and then an adult.
Completely understand that point. It's a $600 billion company even after this down move. He's not the only employee. He's not the only one making a decision at Tesla, but I do understand that sentiment. But it is different than a team like Meta that's actually taking the money of Meta and deploying it into something that is completely different than their investors actually invested in initially. Tesla's still a car company. It's still focused on alternative energy. Its CEO is just focused also on something else. So I think those are very, very different, but only time will tell how this plays out. For those who are looking at this from a trading standpoint, you got the lowest price in Tesla in the better part of a year. So possibly seen as opportunities. Obviously, the market itself has been under pressure as of late too. So there is, of course, a risk tolerance that has come out of this market, and risk assets have been under pressure. We'll see how things shape up. Skewed put butterfly is what we looked at here. It's neutral to bullish, but most importantly about this style strategy is while it's neutral to bullish, that's better reflection of actually the fact that the risk is to the downside. The best case scenario for this style strategy, in particular here, we're looking at next Friday's 195, 190, 170 for a 250 credit. The best price for this strategy at expiration is actually a price that is a lower price. 190, a perfect pin of our short strikes, is our best case scenario. And you can see that on a risk profile if we could pull that up here. It's done for a credit, so there is no upside risk. That's that neutral to bullish element. But there is this added kicker to the downside where if it does just sort of inch its way lower by about another 3-4%, that is sort of our best case scenario right at 190 on this type of a strategy. But even more importantly than that, it does bring our break even down to 182 for this illustration. But there is $1,250 in risk if the stock does kind of plummet below 170. That would be the better part of a 15% decline for this stock over the next 2 weeks. Certainly not impossible for a stock that trades with 70% implied volatility, but it would take a pretty substantial move for those strikes to be breached all the way on the downside, Caroline, in Tesla.
So I think what they were trying to say there is planning on betting against Tesla stock over the short term? Have fun with that. Good fucking luck. Could end badly. So let's take a quick look at Tesla stock year to date. I really want this on the record. To put this in context, this is going to age so fucking incredibly well. And yes, I will be clipping this video in X amount of time just to go back and go, you guys remember when I was saying hello? Let's move on. Year to date, Tesla stock now officially down more than 50%. Tesla has literally fallen more than 50% in 2022. And over the last 1 year, the stock's down about the same amount, 49.16%. Now, just between you and I low-key hope Tesla stock goes much lower. I'm still buying. Cheaper the better. And I really want to make sure people get this, because sometimes I see the Tesla Q dolts in the comments pointing and laughing because Tesla stock's down. They may be unaware of this, but I've never sold Tesla stock because I don't need to. I'm accumulating. So the lower it is, the better, because the cheaper I can keep buying because I'm not done buying. I know it's a very complicated thing to understand, but the cheaper Tesla stock is, the happier this guy is. But this, in my opinion, is the very definition of a spring-loaded stock. Over the last 5 years, Tesla stock up 875%. If we rewind the clock, January 2021, approximately 2 years ago, Tesla stock almost $300 per share. So almost 2 years later, Tesla stock down from those levels, well over 30%. This will blow your mind. In August 2020, Tesla stock $147 per share. Today, up a mere 33%. Can you guys recall what Tesla's done in that time? Other than constantly beating everyone's expectations, running circles around the so-called competition, building up insane amounts of cash in the bank, spending as fast as they possibly can, and still having $20+ billion available? I refer you guys to the period between 2014 where Tesla stock was available at $16.41 per share. And remember I told you guys that I was buying in 2019? On screen now, please pay attention. If you bought Tesla stock on the 7th of March in 2014 and held it until the 31st of May 2019, your Tesla stock would have been down about 25%. That's right. More than 5 years later, Tesla stock down by a quarter. This made absolutely no sense. None. There was no logical reason for this to have happened. None. It was the fear, uncertainty, and doubt, the FUD being believed about Tesla. Instead of Elon's distracted, it's the company's going bankrupt. The competition's coming. I know I'm repeating myself, and that is actually the point. No matter how many dolts I see in the comments here going, Tesla stock's down 50%, you're dumb, it's going lower. I'm always aware that a company's execution is entirely independent of their stock price. This is the perfect case in point. You know how many people, how many trolls were pointing and laughing at Tesla stock investors who were buying any time between 2014 and 2019 because the stock effectively went nowhere despite the company's execution? Then out of absolutely nowhere, the stock market finally figured it out. Tesla stock $12.34 in May 2019, a 20x within less than 2 years, coming back a little bit to reality, then going even higher, about a 30x, and then coming back to reality, still up about 15 times from that point. And to me, ladies and gentlemen, Tesla stock today, as I record this, $197.08 per share in November 2022, down over 50% year to date. This to me looks exactly like Tesla stock in May 2019. Don't say I didn't warn you. And speaking of warnings, this will be one of the last you hear. If you're thinking about joining Patreon, now is most definitely the time. It'll all make sense pretty soon. You know what to do. Click the card in the corner or the link at the pinned comment to join, and I'll see you over there. Love ya.